Hey, Market Chameleons. Thanks for joining the pre-market show. How are you doing, Dima?
Good, Will. Good morning, everybody. Thanks for joining us. So how do you want to start today?
We got a lot of people on YouTube. I put a link out to everyone who is on YouTube. If for some reason the connection between Zoom and YouTube isn't great for you, there's a link out there that links you to the Zoom meeting. You can join us there. We've got Hot Potato Trader on today, Baiju, Amin. We got a lot of people on for us, Dmitry. Well, why don't we start with the disclaimer? That's always a good place to start the show. What do you think?
Yep. Yeah, let's do the disclaimer. Then we'll jump into what's moving in the pre-market hours. So while Will's putting it up, everybody keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, then go seek out a registered investment advisor or call your broker. They should be able to help you answer your questions. So there's the disclaimer.
Awesome job, Dima. Now listen, everyone on YouTube, make sure you give us a thumbs up and subscribe. It's a big deal for Market Chameleon that you help us there. That's always a great thing.
Right. And if you subscribe to the YouTube channel, you will get alerted by YouTube whenever there's
we've gone live,
a new video guide out or we're going live.
Awesome.
All right, let me share my screen real quick, Will. And while I'm doing that, I think that there's going to be some speakers from the Fed today. So just to keep an eye out, I think that's today or before the market open. I forget what time that is, but let's take a look at the pre-market report. And these are stocks that are moving in pre-market hours. We have the most active, biggest gainers, biggest decliners. We're also going to take a look after this on stocks that are expected to announce earnings in the next 2 weeks and take a look at how the options are priced heading into the earnings. We're also take a look at open interest increases from yesterday to see if we find anything interesting there. And we'll go over some option strategy ideas from the vertical spread screener. So let's just start now with the pre-market report. And I'm going to take a look at really quickly. Let's take a look at stocks that just reported earnings. So I see PLAN. You said somebody mentioned that in the morning. That's up 24.8% in the pre-market hours that reported earnings today before the market opens. Urban Outfitters up 17.8% on 93,000 shares reporting earnings yesterday after the market closed. CRM, we were talking about that. That's up 14.6% after earnings, and that also got added right to the Dow Jones.
Yeah, it had a big move yesterday, so you got like a double whammy from that straddle because of its inclusion into the Dow that's to come.
Right, so that's CRM, DKS up 11.3% in the pre-market hours on almost 600,000 shares trading. Also reporting earnings, looks like today before the market opened. So that's really quickly just on the earnings front. Let's take a look at other stocks that are moving in the pre-market hours. Here's one, FLDM. I believe that's
probably another biotech.
Is that a biotech? Yeah. So that looks like a biotech stock. Looks like there's some kind of some catalyst news event there with COVID-19 tests. That's up 18.3%. It's a small cap stock, $626 million market cap. That's trading 4.7 million shares in the pre-market hours. Let's take a look at that one actually from a historical perspective and see what this stock tended to do after it had a large opening gap to the upside. What did that stock do after the open for the rest of the day? So here it is, FLDM. We see that's a healthcare stock. Yesterday closed at $8.79. It's trading at $10.46 in the pre-market hours. That's up 19% from yesterday's close. We see a huge range in the pre-market hours between as low as $9.81, as high as $22. The pre-market VWAP price, $11.14, a little bit below that. Here's what the chart looks like in the pre-market hours. And the biggest VWAP bar, I see right now 2.4 million shares between $9.99, $10.84. If you want to come down here and look at the news that's driving that stock, it's here. We're not going to go into interpreting that news, but you guys can go in there and take a look if you like. Let's just take a look at, from a historical perspective, how did this stock do when it had a large gap up move in the morning? So this is looking in the last 3 years of data and filtering out the 12 biggest gap moves to the upside. And we see over here, these are the gap moves at the opening price. These are the different dates, and any kind of notes here, if there's a press release or the market just also was up big, it's on that side. So the average of those 12 gap moves to the upside is 7.4%. And we see today it's 19%, way above that average. And the high move I see in the last 12, let me see, the high move was 9.6%. So way above even that high move right now, 19%. Again, there's some news out there. You guys could go read it and make your interpretation. Let's just take a look at from a historical price action perspective. So from the opening to the high, the average move was 7.3%. From the open to the low, the average move was down 6.4%. From the open, after it gapped up, from the opening price to the closing price, what we see is it tended to drift higher more often than lower, 58% of the time higher, 42% lower, an average return of positive 0.7%. It's about like 50-50, really 58-42%. During the absolute average move between the open to the high was 6.7% with a high move of 23.7. So we could see was very volatile. After opening up, having a big opening gap, it still had a lot of volatility during that day. So that's really quickly FLDM. Let's see if I could find. Let's look at which one was somebody was asking which one about.
PLAN was one of the stocks they were asking about.
All right, so PLAN, here it is, closed at 47.82 in the pre-market hours, $60.45. That's up 26.4% in the pre-market hours, and I believe that's also based on news related, right? Here's what it looks like in the pre-market hours, just like going almost straight up. The biggest VWAP bar I see is between 58.78, 59.85 on 121,000 shares. Also, what is that market cap stock? So this is actually, it's a 6.5 billion market cap stock. Let's take a look at its earnings history then. So this is what of. So is this a relatively new stock? Well, because I don't see that much data on it. Looks like maybe IPO.
PLAN, maybe a relatively new stock, you're saying?
Yeah, it looks like that to me because I don't see a full set of data. So we have a smaller sample here, but we see 57% of the time in this set of earnings it opened up higher, 43% lower. Average gap move was 1.4%. The absolute average of all the gap moves up and down was 11.5%, with the biggest gap move was 27.7%. That was down here, negative 27.7% on February 27, 2020. After the opening on earnings, the average move from the open to the high was 4.9%. The average move from the open to the low was negative 6%. Historically, it's about 50-50 from the open to the high, 57% of the time. It was higher, 43% lower for an average gain of 0.6%. So this is PLAN. Again, it's short, not a very long history for PLAN. I'm assuming it's probably like a relatively new stock. Let me just see what actually they do. So it's business performance management company. offer. So it's like a cloud-based business. So that's really quickly on PLAN. If there's no questions on the pre-market, well, I'm going to go to what's coming up on the earnings front.
Sounds good, buddy.
Okay. Let's take a look at what's coming up for earnings in the next 2 weeks. So this here, upcoming earnings analysis, we're going to look at a report for earnings that are expected to be released in the next 2 weeks. We're going to look at it from the perspective of option straddle. What is the option straddle? Implying the move to be in either direction, up or down. So the magnitude of the move after reporting earnings. I'm going to look for stocks that on average trade at least 10,000 contracts or more on an average day. So here we have one come up, BILI. That's expected to report earnings today after the market closes. Right now, as of yesterday's close, that straddle was implying a move of 14.5% in either direction. That compares to a 4-quarter average move of 6.6% and a 12-quarter average move of 8%. So we see that's 7.9% above the 4-quarter average and 6.5% above that 12-quarter average, with a high move on that of 13.7%. MRVL, that's expecting to report tomorrow after the close, right? As of yesterday's close, that straddle was implying a move of 7.2%. That compares to a 4-quarter actual average move of 6.3% and a 12-quarter average move of 3.9%. So we see 1% above that 12-quarter average, 3.3% above the 12-quarter average. Sorry, 1% above the 4-quarter average, 3.3% above the 12-quarter average. High move on that is 10.4%. HPQ, that's another one reporting tomorrow after the market close. Right now, that straddle, as of yesterday, was implying a move up or down of 7.7%. That compares to a 12-quarter average move of, 4-quarter average move of 6.3% and a 12-quarter average move of 5.4%. So there we go. The implied move is 1.4% above that 4-quarter average and 2.3% above the 12-quarter average, with a high move in the last 12 quarters of 17.3%. Couple of these other ones are going out a little bit further. We're going to have Zoom August 31st, Macy's September 2nd. So these are at least the ones coming up in the next 2 days that we went over. If you don't have any questions popping up for the earnings, Will, let me know if you do.
Nope, you were good. I liked that BILI, actually.
Okay. All right, let's go to the open interest and let's see what's going on from yesterday's close. Let's see if there's any accumulation of call options. And we're going to look at for big increases in open interest in the calls. So I'm going to go over here by option contract, and let's take a look for options that had at least, let's say, 1,000 contracts or more that increased in open interest. We're also going to look for the open interest to increase by at least, on a relative basis, of at least 20% or more of its average daily volume in aggregate in that stock. So that's what we're saying, 20. So the open interest increased by 20% or more of its average daily volume. Let's look for option type, call option. We're going to set the call option to be at least 25 cents or above in market price. That the option itself had to increase by at least 10 cents or more yesterday. Let's look for an option also where the implied volatility increased. So let's say the implied volatility increased by at least 10%. And here we go. So we narrowed it down to 12 right now. So let's take a look at these 12 that we narrowed down. So here we go. EFC, that stock closed at $12.76. On the April 16th expiration, the 15 call which is above, that's an out of the money call. Stock closed at 12.76. The 15 call, that option closed at 65 cents, up 12 cents on a day. Implied volatility was up 14.8%. The open interest on that call increased by 2,100 contracts. That compares to average daily option volume of 366. So big open interest increase in that. Get a long buildup indicator. FLDM, that stock closed at 4%, up 4% yesterday. Looks like they came after the in the money call September 18th expiration, the 5 call. It closed up 35 cents to $3.95. The implied volatility was up 14.1% in that call. The open interest increased by almost 2,000 contracts on that option, 1,987, and that compares to an average daily volume of 1,492. I think, was that one in the pre-market out? Do we see this one?
Yeah, FLDM was one of those biotech that.
Okay, so that's up 16.6% in the pre-market hours today. GPS, let me see what's that's the gap. So gap closed up 10.4% yesterday. They came after the August 28th 17.5 call right at the money. It looks like there's an earnings today after the market close for that stock. That option was up 56 cents yesterday to 79 cents, closing at 79 cents. Implied volatility was up 19.3% in that option. Open interest increased by 5,176 contracts. That's 20% of its average daily volume of 25,548. Again, that's more related to earnings, upcoming earnings. HON, Honeywell, that got added to the Dow Jones, right?
It did, yep.
So yeah, it was up 3.2% yesterday. Looks like on the December 18th, longer term, December 18th, 175 call, that closed at $5.17, up $2.32 on a day. Implied volatility was up 10.3% in that option. Open interest increased on that contract by 1,660 contracts, which represents 28.3% of the average daily volume in Honeywell. So upside call, $10 out of the money. Open interest increased by 1,660. JMI, let me just see what that is. Jumani Technologies, in some internet retail stock. It looks like it's an ADR. So let's take a look what happened there. Stock closed at $10.61, up 2.5% on a day. Looks like we're looking at the September 18th expiration, the 11 call. So out of the money call, that option closed at $1.55, up 35 cents. The implied volatility on that option was up 20.7%. Open interest increased by 6,469 contracts on that option, representing 51.7% of the average daily volume in this JMIA.
Interesting side note on this JMIA.
Yeah.
The majority, it's like a play on West Africa. It's a e-commerce platform in a lot of the third world countries, but a big segment of their income comes from West Africa, which is interesting.
Oh, okay. Yeah, I didn't know that.
Neither did I.
Yeah, thank you
You're
for
welcome.
sharing that. Let's go quickly. LRN, that was up 7.3% yesterday. Looks like we're looking at the September 18th expiration 44 call. So right around at the money, a little bit above. That option closed at $3.25, up $1.65 on a day. Implied volatility was up 15.1%. Open interest increased by 2,658 contracts on that line. That represents 94.1% of the average daily volume in that in the options on that stock. Let me see what the name of some of them I don't recognize. So Consumer Defense Education and Training Services. PRNB up 1.1%, higher price stock, closed at $101.07. Looks like the November 20th longer term option, the 105 call, and out of the money option, that closed at 65 cents, up 35 cents on the day. Implied volatility was up 17.9%. Open interest increased by 3,166, representing 140% of the average daily volume in that stock. Toll Brothers, we had in September 4th, looks like 3 lines in a row, the 48 call, 49 call, 50 call. Open interest increased on all of those. Oh, and the August 28th 50 call, those were earnings related. That reported earnings yesterday after the market closed. So let's take a look. So these are all earnings related. So that's up 1.6% in the pre-market hours after reporting earnings. Yeti, I think we talked about that one actually. That came up a couple days ago.
Yeah,
so
that a high end. They compete with like Coleman coolers, very high end coolers.
Right, to like take to the beach and stuff, yeah. Right?
Yep.
So Yeti up 0.6% yesterday. That looks like the August 28th expiration expiring this week, the 52 call, a little bit out of the money. That option closed at 93 cents, up 16 cents. Applied volatility was up 11.2% on that option. Open interest increased by 3,153 contracts. That represents 78% of its average daily option volume. So that's really quickly just kind of going through one scenario in the open interest from yesterday. Let's take a look at, unless you have questions on the open interest, I'm going to go.
We're good.
Okay. Let's look for bull put spread ideas. So this is verticals. We're looking at vertical spreads, selling a put spread for credit. And I'm going to use one of our preset filters. So today, let's take a look at the market leaders and see what pops up. So these are stocks that are market leaders in the S&P 500. We're going to look for bullish put spreads with positive edge, historically high probability of profit. And let's see what this popped up in here. So we see there's about a dozen or so. So Apple closed at 499.66, almost 500. It's filtering out the September 4th expiration, selling the 490 put, buying the 485 put. That's for $1.85 credit. We think that put spread is worth theoretical value is 84 cents based on historical data and price behavior, that's about $1, a little bit over $1 of theoretical edge. That gives you a 32% theoretical edge. Historical win rate 82.4%. We see that you get a little bit of a cushion to the downside. So stocks at 499.66, as long as that stock stays above 490, you keep that $1.85 credit, which would be a 58.7% return on the money you have at risk on September 4th expiration. In other words, if both of these options expire worthless, you keep $1.85, you risk $3.15. If Apple drops below 485, you got to buy back that spread for $5. You receive the $1.85, that'll be $3.15 loss. So again, 58% return, 185 versus 315 of this, 85.7% return on money at risk by September 4th expiration. You get a cushion of 2.3%. In other words, the stock sits here, you'll make the 185 goes up higher, you make 185. If it reverses and goes in against you, that going down, you have 2.3% before your break even. After that, you start losing money. Microsoft, let's see, filtered out September 18th expiration, selling the 215 put, buying the 210 put for $1.85. We think it's worth 87 cents theoretical value. That's giving you a 31% theoretical edge. Historical win rate, 82%. That looks like also 58.7% return money at risk if the stock just stays above 215, September 18th expiration. Facebook, we got two of them that popped out, so those are tie. Let's take a look at the first one, September 25th. It filtered out, selling the 275 put, buying the 270 put for $1.70. We think it's worth 87 cents. That gives you 25.3% theoretical edge with an historical win rate of 81.4%. Stock stays above 275 on September 25th expiration. That's a 51.5% return on the money at risk. Let's go to Visa. That stock closed at 208.09. This filtered out the September 18th expiration, selling the 207.5 put, buying a 202.5 put. That's the spread, receiving a credit of $1.74. Theoretical edge on that, theoretical value on that is $1.17. We see that gives you theoretical edge of 17.6%. Historical win rate is 74.6%. If that stock remains above 207.5 on September 18th expiration, the return on that spread is 53.4% money at risk.
Hey, D, we're getting some questions and some comments in the chat on YouTube Live about the theoretical edge, how it's calculated.
So the theoretical edge is taking the difference between the market price, okay, and the theoretical value, and dividing that by money at risk. So that's the theoretical edge, right? So that's how much extra you're making above that long-term theoretical value. So the theoretical value is calculated based on historical stock behavior. On average, if you did this same spread with the strikes same distance away from the stock price, and same amount of time to expiration, and if you did it over and over and over and over again, the historical average end value is 84 cents. In other words, if you sold it for $1.85 each time and on average bought it back for 84 cents, so your average return would be $1.01. You've risked on average 3.15, so that's your theoretical edge, 32%.
Perfect explanation, my friend. That helped Mike H out a lot. He said, perfect. Thanks.
Awesome. So let's take a look at a few more before I move on to, we could look at unusual option volume, but might as well just go down the list, see what else.
Hey, while you're there, Jake is asking, and he's been so helpful on the chat, answering so many questions.
Yep.
He's looking at a credit put spread in CRBP.
CRBP.
Yep, it's a credit put spread. It's a low price stock, so it's the 5, 7.5 SEP 18 expiration.
All right, let me just move to that one. So I'm just going to unfilter these.
While D's getting that, everyone, please, if you're on YouTube Live, and I know there are a bunch of you, if you're not already subscribed, please subscribe to the channel, and don't be afraid to hit that little thumbs up. It's much, much appreciated.
So this one's CRBP?
Yep.
Okay. And what was the question?
Well, he's looking at the credit put spread, the 5, 7.5 into the SEP. He just wants to show everyone how you look at it, I think, on the Chameleon, because people were asking about it, and he was nice enough to.
Sure. So this one's CRBP. This one market cap 643 million. Again, this is a lower market cap stock. Probably has more a lot more volatility. So here, these are, he was looking at the September 18th expiration.
Yeah,
that's what I have it set
and
to.
he's looking at the strike 5, the spread between the 5 and the 7.5 put spread.
Okay, right. So,
oh, I'm sorry.
No, go ahead. What was
max? He's saying max gain $1.30, max loss $1.20, with a 97.6 probability of working out.
Right. Now, keep in mind, if there's some kind of news around this or some kind of event coming up, that could weigh in on also that this is only looking from a historical data, right? Historical price action analysis. So let's take a look at CRBP. So we see that right now, September 18th, selling the 7.5 put, buying the 5 put, $5 put, $2.50 put spread, right? Right now you're receiving a credit of $1.30. If you buy it, if the stock's below $5 on September 18th, you buy it back for $2.50. That's a $1.20 loss, right? You got $1.30 credit, you buy back for $2.50. That's $1.20 loss. You got about 24.4% cushion to the downside. That's where how much it could fall before you break even. Beyond that, you start losing money. Let's see from historically. I'm going to just open that up. So here's the analysis here, and we're going to see right now. See the stock's $8.21. We're looking at the 7.5 $5 put spread for $1.30 credit with 17 trading days to go to expiration. So here, the sweet spot here is if it's above $7.50, right? Or as long as from today's price, it's at negative 8.6% or higher from today's price, that at expiration, that'll be the sweet spot because both of those puts will expire worthless and you get to keep the entire credit. If it's below $5 or drops by 39.1% or more from today's price, or below that below that $5, then this put spread will be worth $2.50. So again, that's where you have to buy back for $2.50, sold it for $1.30. That'll be a loss. Anywhere in between $5 and $7.50 or in this band, 39.1% to negative 8.6%. This spread will be worth anywhere between $2.50 to $0, depending where it lands. Lands at $7, will be worth 50 cents. Lands at $6.50, it'll be worth $1. So here, let's take a look at the last 4 years of data and just see how frequently that happened. So based on last 4 years of data for 17-day hold period, we see that the percentage of times that stock after 17 trading days was trading negative 8.6% or higher, that happened 74% of the time. Here's the data below, right? So 74% of the time that both puts would have expired worthless, and it would have been worth 0 at expiration. The times that it happened in between, that it landed between negative 8.6% to negative 39.1%, that happened 26% of the time for an average value of 64 cents. The amount of times it dropped below 39%, that didn't happen in the last 4 years after 17-day hold period. So if we took the average of all these, 74% of the time times 0, 26% of the time times 0.64, added them up, on the average value is 17 cents. So that's how we get the theoretical value.
Awesome job, Dima. We've got about 2 minutes. That's enough time to say, I guess, goodbye, right?
Yeah, let me just switch that to 6 years of data just to see if I expanded it to 6 years of data. So even in 6 years, you know, that's a really steep drop. So something might be going on in that stock. I didn't really read into the news or go deeper into it, you know, but this is just a starting point. So keep in mind, go look and see if there's something in that stock that may warrant a big drop. You got to take that into consideration.
There you go. Jake actually got that by just screening the theoretical values. It popped up for
Right.
him. And he
So
got
here it is. It's a biotech stock. They might have something coming up that could be like a make it break it, you know, for that company.
Watch
So
out for the
gotta
catalyst events, everyone.
Right. Biotech stock, sometimes, you know, one study could be a make it or break it situation. So you have to always take that into consideration.
All right, the bell's about to go off, my friend. Another great pre-market show. I know there are a lot of questions out there, everyone. We'll try to get to them tomorrow. We can't get everything in. It's a very active show, and great job, Dima.
All right. Thanks, everyone. Thank you for joining us, and hope to see you guys tomorrow.
Have a safe trading day, everyone. See you tomorrow. Bye.
Bye, everyone.